Garden on this, what day is it? 12th of the 12th in 2022. That means we've got 13, or is it 12 sleeps before Christmas? Something like that. Anyway, if we do celebrate Christmas, then I hope you're getting prepared for it and it is all going well. 12, is it, Sam? Yeah, you're right. All good. Advance happy holidays to you as well, Sam. We've got, this is the last Monday show before the Christmas break, and we'll update you on those restart times if I can recall. No, I can't recall. But we'll update you with when we're going to resume, and we are coming back in 2023 as well. Let's get stuck in. Welcome to those of you who have joined. It's nice to have you on board, of course, and those of you who are relatively new to the show. It's always wonderful to welcome new people. We hope you get something out of the show. If you choose to, you can come on mic, you can come on camera, you can share anything you want with us. That's what it's all about. We're trading buddies, and trading buddies share, and that's what we hope to do throughout the shows that we do each and every Monday and Thursday. Actually, be joining us shortly. Hi, Quinn. It's an amazing week. I won't touch on that just yet. I'm sure Ashley's got plenty to say about it, but there's red news all over the shop, and we will be looking for a little bit of volatility throughout, and that's a wonderful thing because it gives us some opportunities. All right, let's start, as we always do, with a look at the pound versus the dollar. That is not the pound versus the dollar, that's the euro versus the dollar. If you're wondering why that candle has a decent size about it, it's because the GDP figures in the UK were released not that long ago, and as you can see, they were favourable for the pound. At this point, the reaction is quite, well, it's strong-ish. Let me put it that way. Share screen, sorry. My issue, I did press one button, but not the other. So there's the candle. You can see it's quite strong. Do I want to trade the breakout of this? Well, why not? We'll see where it ends. We're only in test mode, don't forget. So it's not the end of the world if we get it wrong. In fact, we'll learn something from it. That's what it's all about. So those of you new to this particular scenario, what we do here is we're trying to get the breakout of the Asia session as we go into London session, and to isolate the range thus far from Asia session to now, we simply find the bottom. Asia session begins here. So there's the bottom of the range thus far. It's going to be a one candle range, obviously. And the reason that is because of that news that I just mentioned. So we've got to wait till this candle closes, which is going to be in about a minute and goodness knows how many seconds. The low is established. There's no question that we won't be going any lower than that until this bar closes, or before this bar closes. So the low will be 1.2205. So that will be our take profit level. We're going to go short here, short because whenever price is above our midpoint of the range, we look to trade it short. Not sure I want to do that in this news half hour, but we'll do it just for kicks. Don't forget it's test mode, right? It's to be traded if you're going to trade it at very, 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 very small risk, as I will be, and we'll monitor the results and see if it's worth doing. So the high at the moment is, not surprisingly, very close to the daily pivot at 122.60. Yep, that will be the high at this point, and therefore the stop loss. Right, we've got it. So now we've got 122.05 to 122.60. That's 55 pips. So the midpoint's going to be 27.5 above here, which will be 122.32.5, which is pretty much where I am. So that will be the entry for the short. Okay, we will take it because it's meeting all our parameters. Parameters being price is above the midpoint. So we want to go short. We want to go against momentum. And it's well above our midpoint. So let's take the position. The level of entry will be the midpoint, 1.22325. And the stop loss will be the high of the range, 122.60, 1.2260. And we will take profit at 1.2205. Oh, that's pips, isn't it? Let's not take profit. Sorry, it's not what we want to do. We want to take our TP1 at 1.2205. Must be Monday. And we'll do nothing at that point except move our stops to entry. So we won't take anything off the table. We'll simply move our stops to entry at that point. And we will get rid of TP2. We don't want that. We can set a target because we know what that will be. It'll be 2.5 times our risk. Our risk in this case is, I should know that, shouldn't I? 22.32. It is 27.5. So 2.5 times 27.5. My goodness. That's 55 plus 13.75. 68.75. Why do I do this to myself? Less that. So it's going to be 63.75 below there, which we let's call it 121.36, shall we? Is that good enough? 121.36. So it's going to be 96 pips. That's 2.5 to 1, right? And don't forget, we've got to reduce our risk to billion down to 0.05. So it's a micro lot trade. There we go. There are the parameters. So our entry is here. Our stop loss is here. Our break-even point is there. And our target is 121, or it's about 37. Let's call it 121.37, shall we? Righto, that's that done and dusted. The panel. Wow, there's so much to talk about. I can't believe how much there is to talk about, including, of course, I've got 3 in the waiting room. Sorry, guys, I've just got to catch up with this. Someone else is helping me. That's good. Righto, I think we're good. Right, as I said, so much to talk about because this week is an absolute clanger in terms of news events. And I think if we manage this properly this week, we could actually make some decent money. But we've got to be very, very careful in what we do. So I'm going to start the ball rolling with the game changer bars for the week. Those of you who don't know what a game changer bar is and haven't been in the show for some time, let me explain. We go to the weekly chart. This is how I actually get prepared for the week. It gives me a bias for the week ahead. That's all I'm looking for, is I'm looking for a directional bias out of these charts. And the weekly game changer bar, or candle, call it what you want, is a candle whose high is higher than the previous week and closed on or near its low. If it were in the opposite direction, it would be a candle whose low, if I can find one, there's one, whose low is lower than the previous week and closed on or near the high. Doesn't have to be on the high, just near the high is fine. So that would have qualified, and you could have traded that long. This qualifies, and you can trade it short if there are other or there's more evidence to survive. Thank you, Sam. Cheers. If you have the correct amount of parameters, right? So that could be and should be based on what I call the big boss. Now, the big boss on Euro Aussie, let me go to my analysis chart. There we go. The big boss on Euro Aussie is, to my mind, well, yes, the big peak. There's no question there that that's the most dominant feature of the chart. Is it the most dominant directional finder? And by that I mean, is it ruling the roost? Is it ruling the direction that this market is moving? And to my mind, yes, it is. You would find a million people to argue with me that this is a double top. To my mind, that's a double top. What's a double top? Most people would say that it's equal highs, double top, double top, double top. To my mind, that's a top and that's a top. What's two tops? Yay, double top, right? Got it. So therefore, that's a double top. So that, to my mind, is ruling the roost at the moment. You can also see that there's a head and shoulders sitting here. We've had, actually, I'll go a bit tighter on that so you can see what I'm talking about. Left shoulder, right shoulder, head. My goodness me, it's a big head, no question. There's a neckline sitting there, which was broken and retested. And every time we get a game changer bar, we go short. Game changer bar there. We've come back to this neckline-ish, should I call it that? But there's a massive confluence there. Resistance area, broadening price pattern, horizontal level. Everything there is telling me that this has to go short. So that, of course, means I've got to buy a short. And when I've got a print from last week that is telling me to go short, the reversal bar, then I've got to listen. What I do have to take into consideration, however, is how much reward is available to me to take the risk that I need to take. Well, the answer to that is there's the first reward point, monthly pivot. There's my entry. There's my second reward point, less than 1-to-1. So do I actually want to trade that bar? And the question, or the answer to that question is no, I really don't. But does that give me a bias for the week? Yes, it most certainly does. I'm absolutely bearish this pair. Then I look at my daily chart. And my daily chart's telling me that I've got a clear, very clear potential false break of this resistance area, this area here. Broken above, I've consolidated, I've come back underneath, and I've retested that area as well. Therefore, tomorrow morning, if this candle closes pretty much as it is, I will most definitely put an entry below that candle and I'll put my stop loss above it, expecting price to go to here. It'll stall here for sure, maybe retrace a bit. Then I'm expecting it to go to there, and I'm expecting it to go even farther than that because I'm at this giant resistance level and I've got this broadening pattern telling me the price is going way, way, way down here eventually. Won't go here tomorrow, won't go here in a week, won't go here in a month probably. But eventually I'm considering that's where it will go. So that's my thing. Absolutely glued to it, looking for an entry on Euro Aussie short. That was a long way around telling you that I'm bearish Euro Aussie. Let's go back. That was the first of the game changer bars. Sorry, it was the second. Aussie yen I didn't discuss. I won't go into depth with this one, I can assure you. Aussie yen, very much a currency pair that depicts the market sentiment. And on the weekly chart, it's giving me a game changer bar, lower low, right? Lower than the previous week, closed on or near its high. So that's telling me to go long. Context. Is the context of this pair, in other words, the big boss, as I call it, is the big boss suggesting that we go short here? What's the big boss? I've got an inverted head and shoulders here. We've come back, retest. We've had higher, high, higher, low, higher, high. But is that the big boss? It's a bit difficult to tell. So we've got a big double top sitting here, another double top sitting here at a resistance level, double bottom sitting here, higher, low. This is all over the shop. I haven't really got a big boss here, in my humble opinion. So if I got another reason to go short here, then I would consider it. If I've got a reason to go long, I would consider it. I don't have one. There's nothing to tell me here to go long. Everything's telling me here that the next direction on this pair is short. Got head, I've got a couple of shoulders. What I haven't got is a break of the neckline and a retest of it, or do I? That's the question. So I'm not considering trading that long, along with the game changer bar. Euro Swissy. I'm a little bit of a bear the euro this week, and the game changer bar is suggesting that we go short. It's suggesting that we go short directly into a support level. So the answer is no for me on Euro Swissy. I'll just leave that one alone. The fourth and final is Pound Aussie. Now, Pound Aussie is one that I do have a directional bias with, and that is short side. This is very, very similar to, I've got a Pound Aussie chart. No, I don't. This is very, very similar to Euro Aussie, not surprisingly. And we do have that broadening price pattern here as well. So I'm expecting this to act as resistance. There is a bit of a horizontal confluence there as well. So I'm expecting this to go short at some stage. Weekly game changer bars telling me that that's the case this week. And for that reason, I think this is absolutely, if you want to trade a game changer bar, this is the one that I would trade, pound versus the Aussie on the weekly. I haven't placed that order because I wanted to see what happened with pound news today, and we've got a pound rally. That's a good thing, not a bad thing for this potential trade, because I like price to run away from my entry before it actually takes it on. So I will place that order. I won't place it now because we've got plenty of other things coming up, including Ash and George, but I'm going to place that order underneath that bar. It's a one bar reversal, which I don't like, but I'm in love with the directional bias, and I do have reason to go short here. So I will be trading that as a game changer weekly. Stop loss above, entry below, first take profit before the monthly pivot, stops to entry potentially, and we'll see if that can follow the Euro Aussie path. Don't really want to be exposed to both at the same time without profit in the bank. So we'll go with this one first. And if we can get some profit in the bank, we might look to pick up Euro Aussie as well. There's one more before I go, and this is a game changer plus bar. It's pound versus the Kiwi. Now, game changer plus bars are a little bit different, but they do give me a directional bias just like the game changer bars. In fact, they can be far more potent and powerful. Game changer bar the week before suggesting that we go short. If you had done that, you wouldn't have been triggered yet. And the interesting part now is we've got an inside bar on that weekly bar, also suggesting that we go short as a bounce off the monthly pivot. This one I'm not so keen to trade per se, because there is a support level directly underneath us. But if I do get this bounce that we're experiencing at the moment on the daily chart, which is a complete mess, I must confess, and we're at the bottom of the range. So it's more likely to go back to here before it goes short, in my humble opinion. But I am watching this closely, and I would like to pick this up short as well, pound versus the Kiwi. I think the Kiwi's been so hot that now is not the time. Let it retrace a little bit. And if the pound gets a bid on the back of the GDP figures that have been released this morning, then it may set up as that third bounce or second bounce, if you like, off the monthly pivot. We'll see how that pans out. But yeah, interesting news on the pound this morning. Not sure what that's done to the FTSE, but we're about to find out as we say g'day to Ash. G'day, bud.
G'day, mate. Pretty flat actually. Not a whole bunch on the FTSE. Actually, I thought it might move the pound a bit more than it has done.
It has, yeah.
Yeah, but it's been pretty quiet. I did take a trade on euro pound, but I'm not sure whether it's that wise actually. I'm just going to bring it up and where are you? There you are. I'll bring it up for you so you can have a look at some of the thinking behind it. But I think you're right on the euro. I'm pretty bearish on the euro this week as well. But in saying that, I don't think the pound is probably the right one to go against. It's just No, I'm just not sure whether the pound has got really the strength either. I think when it comes down to the but both the euro and the pound, the economic situation, they're quite weak on both of them. And I was just looking at this GDP number to maybe give us a little bit of a boost for a short period. And I'll bring up. Let me just show you my chart here. Here we go. So this is the current position that I've got with the euro. Just taking a short here. I was probably a little bit early actually, by about 4 pips too early, because this is probably the right zone, and it might even be around about 45 minutes too early in the end. But I think there might be some follow through. But I'm aiming down here, and I'm looking at this, and I'm thinking I just don't know if it's going to get there. And when I look at the dailies, this is the problem. It's right on support really down here. So I'm expecting it to come back down to support, which it could do. But there's not a lot of room down there. And you mentioned the Kiwi. Let me just redirect this camera, see if I can get rid of that light a little bit. There, I'm going all over the place there, mate. So that just as you mentioned the Kiwi, I looked at the Kiwi, the pound Kiwi, and that's on support, and it's getting a little bit of a push from the support line. And then you look at the Euro Kiwi, and it's exactly the same, pretty much on support and getting a push from the support line. So it almost looks like a competition of the weakest currencies at this stage, with the Euro pound. So I'm not that keen on that actually at this stage. And also I've taken a short with the Euro dollar, which is maybe not the best either, because there's no hedge, but there's a little line through there. It could be a little bit higher as well. So I've taken a bit of a short with the euro. I prefer this one because of where it is. I think the euro dollar is an area of resistance, and I think that we could start to see this one push down. And on the short term basis, which is really what I've done it on, there was a little bit of a dip down, but it hasn't managed to break through these lows at this stage. There's this trend line down here, which it may well now have broken. So yeah, it looks like it has. This one might well turn around, but I'm looking down here. But euro could push up.
If you have a look at the weekly chart, that'll tell you a different story. Put a trend line on the weekly chart.
Yeah, it looks good, doesn't it?
Yeah,
it looks good. It does look good for some downside. So I'm okay holding on to this one. I mean, with the euro, with the pound euro pound, I should say. I might well have to clear out of this position. If it pushes back down to entry, I might rethink this one. There's the same with the weeklies there. Really, it does have some room. If you look at the dailies, it doesn't have the room, but on the weeklies, it does. The question is, what's going to drive it down there? The GDP figure this morning from the United Kingdom was a surprise. I'm looking at the current figures that lead us into that, and they're not particularly healthy. The pound is not or the UK is not, or wasn't looking like a particularly good economy at all. But as you rightly say, mate, this morning, month on month, a pop into positive territory on GDP. Year on year, it's at 1.5% from 1.3%. But what I thought was most significant was maybe the trade balances, negative 14.4 from negative 15.6. So there's a billion coming back in the trade balance, and it looks pretty good. And non-EU trade balance at negative 4.8 from negative 8. So there's some deals being done outside of the EU. As the UK tries to make the transition into a different economy. They are obviously doing something right. I don't know how right it is, but they're obviously doing something right at this stage, because they're managing to kind of get the trade balance.
It's interesting. You don't know what it is. That's a great.
No, and you see, the thing is, people ask me
what are they doing
quite
right?
a lot about how I feel about Rishi Sunak, and then I kind of like go on how I actually feel about Rishi Sunak. But actually, when it's in the end, it's going to come down to the numbers, and he's not been in long enough probably to influence these numbers.
Yeah, sure.
The numbers are starting to look a little bit more positive, and that will shape really how I think about Rishi Sunak. It won't be down to some of the domestic policies, because in a lot of ways that each party will do something good and something that's not so good. But when it comes down to numbers, then you start to kind of get a proper judgment on whether the leadership is working. Are we actually a growth economy, and are we able subsequently to then pay for the things that the people need? So I'll continue to look at that, but kind of back to the drivers. The big numbers this week are on Wednesday and Thursday. We got the Fed and we got the ECB and we got the Bank of England. And that makes all these trades quite tricky. And it makes all these trades I want to clear out before those numbers happen. I'm not going to hold through. I'd like to get my short-term moves going in my direction and see if I can actually make some money early doors. If I can't, then I will wait until those numbers are released. Because there's a lot in the way, not just on Wednesday and Thursday, but on the lead up to Wednesday and Thursday. There's CPI data, there's lots of inflation data.
It's jam-packed full of news this week. It's amazing.
Yeah, it is. And you asked about the FTSE. So let's have a quick look at the FTSE, because the FTSE is relatively stationary. It hasn't really gone anywhere as yet. This is the 4 hour. So let's look at the 15. It looks like it's attempting to kind of like break out of this level, and it may well get there. It looks okay for a trade, actually, the FTSE. It looks okay for a trade. There might well be a position here that can be taken.
Jasmine, I will answer your question, but I'll do it in a little while. We've got George coming up as well, so it'll be a while, but I will certainly answer your question. And the strategy is in trial mode, as I said before. So if you're looking to trade that, please do not put any meaningful money on it, as I said.
It looks okay, mate. It looks the FTSE looks like it could push, and I'd be looking for this here. No, there's the 23 to the upside. You'd have to get your stops under that area, really. But it looks all right. I might take a trade on the FTSE, actually. I mean, looking at this on the dailies, we've tested the monthly pivot now. So a little push to the upside looks on to me. It's just the what needs to be considered with the FTSE is that we are high, and because of the way I do things, if I take it, well, it looks all right, actually. Taking a position here, you've got to be pretty comfortable that it's going to clear your level, and not just all of a sudden start to turn in the opposite direction. Because if it doesn't and it turns down, there's a big gap. There's a big gap to the downside here. So, but I quite like this. I quite like it.
You need some time?
61. Yeah, give me some time, mate. That might be the idea. I might take a trade on the FTSE long here. I quite like a potential push up. It's just the maths of the stops not going to give me a one-to-one.
All right, we'll give you some thinking time, and okay. What a good opportunity to introduce George. George, hello, mate.
How are you gentlemen doing?
Are you still in Bali, or are you back out of Bali? What are you doing?
No, we're still in Bali, and we're going to be here for a few more weeks. Sun arrives tomorrow.
Wow, okay.
So
you bought a couple of villas while you're there?
I bought 3, actually.
Why did I say that?
It's absolutely beautiful weather. We're really soaking it in.
No, it's not beautiful weather. It's horrible weather. I can't stand it.
Yeah, I know. No, it's terrible if you're not here. It really is.
Yeah.
Just listening to Ash pondering over UK 100. So let me just put that up for now. I'm not in any trades, but I'm looking at 2 levels of resistance and support. If we come down here, and I'll put it down, put it on the 5 minute just now. If we get down here, I'm going to look to buy because there is a potential double bottom setting up on the daily chart here. So I think this level here could prove to be a good level of support. It was the same level it was a level that the bulls broke out above, way back in November. That's on the 22nd of November, we came back and tested it. On the 20th of November, we came back, tested that level again yesterday, creating this doji. Now, for me, the market it is bearish because we are below the 10 EMA. But what it means with this doji, I've got two levels of possible trade: either long from the low of that one bar trading range, or if we get back to the top here and test that, then I'll be looking for any shorts, but staying within that range. If I pop it down to the 5 minutes. So again, still the same thinking. My only thing is, when I'm looking down at the time frame that I trade, we are at the midpoint of the range of Friday, the range of yesterday, right? So I don't want to trade in here. That's why I'm saying I want to see how the market gets down to the low of Friday, and then these two levels that I spoke about. If we get down here and I get a double bottom of sorts, whatever kind of reversal pattern, then I'll be keen to buy back into the range and see if the bulls can get back up here. If we get to the top first, because we are within that one bar doji of Friday, then again I'll look to sell from the top of that range. So I'm gonna wait to see what happens when you get to those extremes. But first choice or higher probability for me is just to follow that daily time frame pattern and look for tests of this level of support and buy back into it.
Yeah.
So,
do you know, mate? I've been looking at it, and because I'm scratching my head, I can't justify it. I just can't justify the trade, and I think you're right. We probably need to push down maybe another time beforehand. I've closed the position on the euro pound as well because I think there might well have been too much support down there. So I'm looking at these charts today, and I'm wondering whether actually there's going to be a decent opportunity. I mean, we've got a glut of data sort of later in the week, and the market's open incredibly quiet so far today, which means that we could be waiting. You might take a position and be waiting for 3 days just before you get any sort of result, even on a short-term time frame. Because there could just be a lack of liquidity as people just be patient for things to come out, or at least start to anticipate the number closer to the day. So yeah, I'm with you, mate. I'm not going to take that footsie trade. It's just it's too much of a head scratcher.
Yeah, I mean you're right. This the one market that I just trade as it opens is 150, but I mean this morning I took a couple of trades. It's kind of trickled all the way down. There's that other session that closes, and I took a trade here, and I took another one here. But then I got out, the early morning close, and it's just kind of continued funneling down.
Yeah.
I didn't take anything further. There's no decisive pressure on it. What I was hoping when I got into the day, because of that candle, if it had been a bear candle, fantastic. I think we'd have had the momentum. But it is a bearish candle. It's a high test, but the bulls controlled it. So that's probably why we need a little bit more action on it. But having said that, the one market I'm looking to short today actively is S&P 500.
Interesting.
Off this candle. Now, there's this is a daily, right? So there's something else. So this is a decent enough setup. We have a problem with this breakout level here, but if the bears are strong off this, they might push below this. But there's something else that's hidden in here that, I saw on the daily. That's kind of governing my thinking of going, not on the daily, on the monthly. This level here, this light blue level, it's the low of August 2022. So it was a near perfect bear signal that was triggered in September. If I go to the monthly, there is that candle there. I mean, that's
Mhm.
that's a decent enough candle for anyone looking to short to say, hang on, bears pull back off the 10 EMA. Let's take that short, and they did, and that was triggered in September. We've had a pullback, but the pullback so far is a lower high, and we are back into the selling zone. And bears who had sold this will still be in the market. There's no reason to have exited. So I'm thinking if these bears are strong, they're going to defend that and want to keep on selling. So, now if you look on the monthly, that daily support here is not an issue, because on the monthly, they want to get down here, right? That's where they want to get. So I'm thinking if this triggers on the daily, if it's going to trigger today, there might be good momentum today. See where it ends. I come in again tomorrow and look out for it. So on the 5 minutes, I haven't had the setup as yet. We've kind of just hung around the low of yesterday, and I'm not going to short within there. I need to see the bears coming in, breaking beneath the range of the morning. And if I get that decisive break and pull back, I mean, for the US market, there's still time. I'm hoping it happens during this session, because I'm not going to stay up late for it. But then I might look at it tomorrow. If it triggers today, sets up today, tomorrow might be going back to what you're talking about. If the market is going to set up for shorts, if it's not today, it could be tomorrow or Wednesday. So there's definitely something at least to look out for here. If the bears are strong, I think we might get a decisive push driven by the monthly bears.
While you're on that chart, George, there's one more reason for thinking there's a confluence area there as well. If you go to the low test bar on around about the 60, that one, and draw a line up to the big bull bar, the bullish engulfing bar, about midway between price and that bar. So you put your trend line on the bottom of the low test bar, drag it up through there. Have I lost George? Have we lost George?
You might. No, he's there. You might. I think you've lost him. Yeah. The internet's probably not amazing in Bali.
I'm back. I think I lost you. I'm not sure.
Oh yeah.
Okay.
That's the one.
Okay, right.
That's it, mate. You got it. That provides you with the confluence at that exact point. If you extrapolate that a little bit further. There you go.
Okay. Perfect.
Another reason. That's all.
Breakout pullback test. Yes, exactly. So I want to wait for that. I mean, that for me is absolutely. Wait on the 5 minutes to see if I get it today or the next day, because I might get huge acceleration from the bears to trade off that. So definitely waiting for that.
Cool. Anything else on the radar, mate?
Nothing else. I mean, the other up on the yen. I'm not going to do anything on these dodges. If we end up with a bear candle, I can start to look at it. Nothing there. On the pound, again, my problem is, the 10 EMA is coming up, and there's nothing for me to trade with, with that short distance. Euro, again, I'm not in euro. Euro interesting enough. This level here, I don't know if it makes much difference to the other ways of trading, but it's a midpoint. It's a midpoint of the 2022 range. That for me is a key level that we're at. There's a huge fight taking place. Bulls want to go above it, and bears want to go beneath it, and if they do, then they want to attack parity. So, I'm really cautious. We gotta have a decisive candle that shows we might break out of here, and then I'll follow that.
I reckon on Thursday we'll know the answer to that one,
hanging
George.
in there now with these parts.
Yeah,
Yes.
I think that's true. You know what? We should talk dollar really, because it's going to shape so many of the markets this week. It's going to shape the euro. It's going to shape gold. It's going to shape silver. Oil is another fascinating one. Because there is sort of this dynamic which is probably outside of the Fed, and maybe the only one that we have an option for an MT4 where there isn't a different dynamic. So oil's another interesting one. I think this week, today is a bit blah. I don't know whether we can find too much, which we could really trade with any real confidence. But thinking through the week, there are definitely opportunities. There will definitely be opportunities this week. So I think we do need to sort of have a look at the dollar and some of the other products that are going to be moved by the dollar.
I think George is on a bit of a delay.
Yeah.
With the internet, mate. We might let you go. I'm sure you're dying to go and have a massage and lie on the beach. You get an ear pierced and all that sort of stuff.
And a bintang.
And a beautiful bintang.
Fair enough, mate. Have a lovely week.
Cheers.
Actually, mate, we won't see you again. This is our last show this year.
Yes,
So,
definitely.
Thank you so much for your contribution.
It's been great. Thank you for having me. I've really grown and I've enjoyed it thoroughly. It's been a pleasure.
Brilliant, mate.
Yeah.
Well, we'll be back on it next year.
Yes, I'll be back in beautiful Johannesburg with my pistol by my side and.
Oh no! I wish you well, mate. Have a lovely Christmas with the family, and we'll catch you in 2023.
Yeah, same to you guys. Enjoy the break. Have a nice rest, and we'll catch up. And cheers to everyone. Bye-bye.
See you, George.
Okay,
so,
as George sinks into the sunset in Bali, Ash, what do you got?
Well, I think we need to look at the dollar, mate. I think we've got to analyze this dollar, because the dollar is going to shape so much of what we do this week. This is the dollar index that we're looking at. Lots of gaps actually in the dollar index, but this dollar has pushed down relatively significantly. Now these highs here are the first port of call. This is the first test of a previous resistance zone for the dollar. Now that doesn't mean that it is the test, because this could quite happily come down here and still, you could say there, or probably there, actually. As long as it kind of doesn't cross this level here, then it's still potentially a higher low. So the dollar could be trending to the upside on the monthly, even though it's hyper aggressive. If it comes down here, it might change the dynamic a little bit and change the discussion. But this is the first one. So we've got a few days left of the month. Does this end up looking like a hammer, a low test bar? And if it does, then there may well be some bulls that come in, for the dollar. Now, looking on the shorter term time frames, well, not shorter term, but on the weekly, you can see that there is also, we start to really sort of pack in the horizontal level here. So there's some support here for the potential support here on the weekly, and on the daily it's even clearer. This is a pretty good line for a horizontal level support. Might be a little bit lower, so it could be down there. But we are in the zone. We're in a buy zone. I'm not saying it's the buy zone, but we're in a buy zone. So this is going to get shaped ultimately by what happens on Thursday. There's a pretty big likelihood. Now there's the pattern there. So there's the resistance zone. So it could come up to this point, then fail, and then start to push up. So there's a few different permutations that could happen. Now, for the dollar to push up, that means things like gold push down. And we were talking last week about the price on gold, and I want gold to come back down to the pivot here and give me an inverted head and shoulders before I'm comfortable trading it long. That's gonna look a lot better. A lot more attractive to my mind. Now, for this to happen, this needs the dollar to go long. The dollar has to go long before gold goes short. So I have a leaning towards a dollar long because of the way that the other charts are shaping up. So where the dollar took off for many months and is now sort of started to find that the parabolic move is as it always does, getting reversed. This isn't that parabolic, but it is. But we've had a decent run to the upside with gold, and a little bit of easing down would be really beneficial. And there's obviously this level across here. So there are levels with gold that suggest that that's the buy zone, and because we're so far away from the buy zone, as I say, that pushes me towards looking for a dollar long going into it. Silver, same thing now. Silver really has taken off a lot better than gold, and it's through some pretty significant levels here as well. So for silver to come back, it probably won't come quite as deeply as gold, and it might even still be within the uptrend on silver. But let me show you the COT data, and you can see what's going on with that, because the COT data, and then obviously we've talked about the euro. So really, those are the three markets that I'm the most interested in right now. But if you look at the dollar, and we look at some of these other commodities as well, let me bring you this. Right, we'll start with the COT data on the dollar, which is this here. This is the COT
I'm still
data.
trying to find something to disagree with you, but I can't. This was my exact analysis last week on gold.
Right, yeah. Well, this is the dollar.
Yep.
So we got these peaks up in the 21st of the 6th, which is 23rd of June. Now everybody note that date, the 21st of June, because it's going to come into play in a little while. So this is the peak in the 21st of June. Now, since then, there's been profit taking, and we've seen the dollar start to weaken. But this I find quite interesting. Last week was okay. We had a little boost up here, but last week was a halt in the move to the downside. Now that suggests that there's some waiting going on. So there is effectively some equilibrium between the buyers and sellers as we push down sort of into the levels that I talked about last week. Now that's not to say that there is buying coming in at support. That is just to say that there is a reduced amount of selling, and the buying is sort of like rebalancing that particular level of support. So that's pretty supportive of that level holding at least through FOMC. After FOMC, we might well see a significant move back in the dollar. It could be to the long side or short side. But this does suggest that we are not going through this level this in the next 3 or 4 days, meaning that the Monday, Tuesday, Wednesday are going to be tough to try and get any longer term positions on. So that's the first thing that COT data suggests to me, that we've paused there. Now, if you look at the euro, big buying going on with the euro, lots and lots of buying, pretty similar picture. For the last 3 weeks on the euro, there has been a lack of further buying. There's no profit taking, so it's not like people are clearing out of positions. They're quite happy to hold on to them, but there hasn't been further adding for the last 2 weeks. After we saw this little jump up here, the last 2 weeks hasn't seen positions added to. Now that doesn't suggest again that the euro is going to reverse, but it does suggest that the pausing could indicate that people are just a little bit less sure here. Maybe significant that profit taking hasn't accelerated. That might be something that we say on the short term we could see a move to the downside, but actually in the long term the euro is still supportive, and that's kind of.
Well, it makes perfect sense, doesn't it? But you've got the ECB and you've got the Fed all in 24-hour period. Yes. Of course they're going to wait. And
you've got the pound. And if you look at the pound's been negative for quite some time, but it is starting to find some support. There's some of the short selling coming out from the pound. Now the euro is the strongest of the COT data of the COT currencies right now because of the enormous buying that went on. Now that buying coincided with the parity level. So we've seen a 5% jump in the euro. over the last month or so. And as I say, the COT data would support that, So where it goes from here, we don't know, because the COT data isn't showing its hand. It's basically sort of saying we are quite happy with our positions, but we're not adding and we're not taking profit at this particular stage. We're quite comfortable. Which could suggest a dip in the euro would be bought up again. That's what we might end up getting. Now, if we then go to gold and silver, we see something of a similar picture, because gold and silver. This is the silver chart, I believe. Yeah, this is silver. So silver has seen a big booster since the 8th of November. So that week going into the 8th of November, we saw a lot of buying with silver, and that's held. Nothing added to, and we can see how bullish it can get. Nothing added to at this particular position, but there's been no profit taken either, or very little profit taken. The profit taken is in balance with the buying. So silver's in a pretty good place here, and we saw gold also start to boost up. I thought it was a week later. Yes, it was. It was on the 15th that we saw the gold traders start to come in. So a week after silver. So it's showing us that actually the bulls for silver are a lot stronger than they are for gold, and that would have something to do with the gold silver ratio. Bit more buying last week, but we are in a zone here. We're not back up anywhere near the really bullish areas. Which again could suggest that there could be a pausing in the buying, but not significant enough to sort of actually send this market longer term lower. It's suggesting that actually in the medium term, we could get a pullback because the buying has come out a little bit, lack of liquidity there, but people are holding positions. So it might not be these guys that sell. It could be the non-reportables that actually push the price down, while these guys hold their nerve and wait for the next kind of run to the upside. So COT data is suggesting that we still get a strong euro. We're not quite sure on what's going to happen with the dollar. We still get strong gold. We still get strong silver. But it's not necessarily suggesting that it's going to accelerate to the upside from here. So it does say at this stage that the pullbacks will probably be bought up, and it's not giving us the indication that pullback's even going to come at this stage. So that's the COT data, mate. I mean, that's giving us that. Now let's go back to the dollar date. Can you remember what it was?
15th
of
12th. Oh, sorry, that date. Sorry, the June date, 21st June.
21st June. Okay, cool. I couldn't remember. I was going to go and check again. Okay, so
I was talking about this new inflection point, which is what's old matey? Not Mel, from the trading retreat. What was his name?
I can't remember, but the Astronarchi.
Yeah.
What was his date? 15th. Okay. Okay,
Yep.
that's the 15th for him. Okay,
which of course is when it's all going to happen.
Yeah, it could. My date's slightly later than that, but yeah, you're absolutely right. It could definitely happen then. But let's go back to the dollar, mate, because the dollar we sort of said, you said it was the 21st of June, right?
Yep.
21st of June. Okay, so let's have a look at the dollar on the 21st of June. That the week of the 21st of June, which is there.
Actually, Phil, if you're in YouTube, was that a time by degrees day, 21st of June? That would be interesting.
Yeah, it would be interesting. So 21st of June. Now let's bring that in on. Now look at this on the 21st of June. This is where the buying started to subside on these highs here. Basically on this high. This is the week. This is the week on the. So this is where the profits started to get taken in.
Mm-hmm.
So this is where the profits started to be taken slowly but surely. They were starting to now that interestingly, just because you see a dip down in COT data, it doesn't mean that the market's going to sell off. It's just telling you that that the bigger players are starting to ease out of their positions, And this was the week here, and it was on these highs. So they were looking at these highs as this pushed up, and through this week here, they were starting to come out of they were starting to come out of the dollar. Now, what's interesting, I think, about this area is that this is pretty much where we sit. You know, that suggests that this price point here is pretty much where we sit, and that could also add to the argument that we are at a support line. And while we're freezing at this level, we haven't sort of started to see the COT data pick up again. But while we're freezing at this level, they've taken profit at this level the first time round, and now they're saying, I'm not sure whether it's going to push lower. Is this where we took profit? Is this going to be our higher low? So I think we could actually hold on 1 second. Yeah, I think we could see some support here, mate. And as I say, it's gonna need to happen if I'm gonna have the gold come back to a price that I wanna get it at. Now, the reason that the 15th is no good for me, it will be a bit early, is that we're already at the 12th, so that's 3 days. I think 3 days taking us down here
is a stretch.
It's not only a stretch, but it doesn't fit with, let's go 3 days along, which is here. That's not going to fit with my left shoulder. That's my problem with it. So my sort of time is going to be, it's around about 60 days from that point there, which is going to put me here. And that's the 27th.
Mm-hmm.
So sometime on the week of the 22nd to the 27th is going to be where I'm going to get most interested with gold. So I need it sort of, in this area, sometime around here. A 5 day sort of move either side, not a problem at all. But the 15th is too wide for me. That's 12 days. That's more than 2 weeks of trade. That's more than 2 weeks of trading days. So I couldn't go with it on the 15th.
Yeah, look, I'm still on board. I'm still on board with the direction, as you know, and as I said, it's exactly the same analysis as me. That's where I see the target if I can find a short, without question. And
yeah,
I'm a little bit surprised right now that the dollar's selling off a little bit because of there were pretty good numbers on Friday, weren't there, for the dollar?
Yeah,
PPI numbers.
Yeah, they were okay.
And that would tend to suggest that the Fed, they were PPI numbers, right? That's not going to stop the Fed from raising interest rates. That's for sure.
No, do you know what is going to come? And this is the thing, I think that a lot of people are going to get blindsided by the statements this week, which does make it a lot more tricky. And it might be one of those situations where you say, even trading around those interest rate announcements and the statements is going to be too hard. I'll take the week off. There's nothing wrong with that. And actually,
sure.
It might be a better way to play it because the data points this week are so significant. They're always significant, but they're more significant than ever, really, because inflation is so high. We've not been in this situation where Federal Reserve action has been so important, and the way that they kind of like battle through, the way not only the way they try and control inflation, but the way that they see inflation going and whether they see their policy actually making any difference will shape how the markets then react. Because the Fed or the ECB or the Bank of England, and the Bank of England is probably the most dovish historically at these points, but the Fed, the ECB or the Bank of England, if they say we will take a certain amount of positioning to try and sort out inflation, but really we accept that this is a supply chain issue, so we are going to pull our foot off the gas a little bit to make sure we don't choke the economy, then obviously that's going to put things in the other direction. And that's sort of where we are. They've gone aggressive. Are they now going in defensive mode? Which many people suggest that they could be. So that's why this week is possibly too tricky. it could be that. And that leads you towards the Aussie, it leads you towards the Kiwi, the yen, and maybe the Swissy instead, of the euro, pound, and dollar.
And the Kiwi, I can't buy into the Kiwi at the moment because it's just been so hot. It has to pull back.
Yeah.
And if we look at oil, as you were talking about oil before, it's the only reason that I can see why the Canadian dollar is being suppressed, because there's no other reason. I can't find another reason why the Canadian dollar is being suppressed. So,
well, the only other thing I thought was that the Bank of Canada have raised interest rates to 4.5%, and I wonder whether they've got quite as much headroom as the others. So with that being priced in, I wonder whether that could be why. And if that is the case, then after the ECB raise interest rates and the Bank of England raise interest rates, I wonder whether we then see the Canadian dollar take over, because they're not really sort of in line for their decision. They'll kind of be next. So I wonder whether they'll if they're perceived to have raised to raise interest rates again, I wonder whether we then see what we've got now priced in having to be repriced. So it might be that we're waiting for those other central banks. But you're right, because actually when you look at the Aussie versus the CAD, the Aussie has had a pretty good time of it against the CAD, and Australia.
Look at the Kiwi versus the CAD.
Yeah. The CAD has been very, very weak. So you could be on it, mate. There might be something to do with the oil situation as well. But that's the only other thing I can think. But look, that's a pretty good level here. There's a support line, there's a resistance line, and we're right on top. So I think that there is a buying opportunity with the Canadian dollar, and it probably does actually sort of start to become one of the ones that is shoved up front. Euro CAD.
It is for me.
Yeah, it could be a really good trade. Now looking at oil, we are now at 70.70. On the
now,
future.
I did my homework on oil. Now I remember exactly what I was talking about.
Okay.
I think it was either 18 months ago or maybe 12 months ago. Can't remember exactly when. But since it went down to zero, basically, right?
Yeah.
The first level it came back to was 44. Then it went to 55. Then it went to 66.
Right, that's right. Yeah.
Then it went to 77. And I said it's going to 88, right? And it just missed out on going to 88 before it turned around again.
Yeah, and it was slightly different. Yeah, there was the 44. You're absolutely right. Yeah, it got up to the 44 and it was resistance. 55.
Yeah, I couldn't believe it when I did this exercise.
My 55 now. This is probably on, probably not on the futures, but it'd be close enough. 66. That was our resistance point again.
What chart are you on?
This is on the daily, weekly. On the weekly.
Try it on the monthly.
There's the 44.
And you'll see. Now you'll see that level on 55.
There's the 55.
You go across to the middle of your screen. You can see where it's been resistance before.
Yeah.
No?
Yeah. Good point.
Across 66 had broken, retested, and went again.
77 is this high.
Yep. And 88 it just missed.
It just missed, 99 is there. And that would make it 1010. That make it 110.
Yeah, it would. I don't know how it went after that, but look at that. Wow.
There's the 110. There's the 110 there.
Mm-hmm.
And then we'd be looking at around about the 122. Yeah, I mean there are these strange stretches with oil, which could suggest that this is the price point here. Which actually, if you look at the 66 zone, I mean that is a very, very good level.
Exactly what I've been looking at.
Yeah, that is
becomes a buy
level.
there.
66. And actually, you bringing that back into play is significant because, as you say, if these sort of if these kind of multiples of 11 kind of come in.
You don't ask me why. It's just something I saw on the chart. Got no idea why, but it's certainly relevant. There's no question. Those levels are recognised.
Yeah, they do seem to be, don't they?
Mm.
There's a 33. So that would leave us at 66 to 77. Now, Biden sort of said that he's going to come back in at 70 to replenish the reserves. So it does make this whole area, can't get it on a daily, but it does make this whole area a buy zone. Look at that on the 66. I mean, that is clean as you like.
Absolutely. And if he says they're going to buy at 70, well, guess who's going to have some buys underneath that?
Yeah.
Which will take him out.
Yeah. Yeah. And you could even go down with stops at the previous level and still have a decent run if you think it's going to the highs.
Yep.
There would still be one. That'd be a break even at 77. So 2s, 3s, 4s. There's a 5 to 1. We even with those nice loose stops there, you could get a 5 to 1 out of this one. Going in there. I mean, I'm really interested, mate. I want to see it come down there. Really, I'd prefer to see it come down there than the 70 level.
Yeah, I agree.
Because of the analysis that you've done, and also because it's this is a clean level. Now, I mean, I was trying to find a clean level on oil, but this is definitely it. When you look at it,
it's a beauty.
Touches. That's the obvious point to try and buy into this. So, I wonder whether if the dollar becomes strong again, if we do get a strong dollar, that could enable this to push down before we head into next year. Oil doesn't have a particularly good seasonal position right now. I don't think, from memory. I will double check it, but I don't think we are in a particularly strong seasonal zone. Strongest seasonally is Bitcoin, but that's coming right down. Nasdaq and S&P are pretty strong. Yeah, oil down 7% by the end of the month over the last kind of period of 10 years. So we're looking for next year anyway. And that could really enable us to get, in the latter stages of the year, like the final week or so, or early next year, that we're looking to buy this up.
I'm in.
You're in, yeah.
Mm-hmm.
You're in.
I mean, I'm not in the market, but I'm in on that basis. Yeah. I think it's a good idea.
Yeah. Okay, mate. Well, we'll look at that with oil. As we go, as it comes down to today, I don't think there's anything. If anybody in the room has got anything, then share it with us, because I think we're both scratching our heads to kind of find anything to trade today, and maybe even for the first half of this week. So
I got a shit ton of ideas. I can tell you that.
Yeah, same.
Whether they're actually tradable or not, it's another story. Yes. I want to answer Jasmine's question before we go any further. Before we end anyway, if you're done. Okay.
Yeah, all done.
So, Jasmine, this is as I said from the outset, this is a trial method of trading the breakout of Asia session as it occurs at London Open, right? Now, it's failed today. And what we're attempting to do, on an hourly chart, let me go a little bit clearer. So the strategy is this. We isolate Asia session. Asia session is the third. Asia opens there on the third candle of the day. So we then find the range between once Asia is open, the low of the range between Asia and London. And today, that bar there, which was a news bar, right? It was the GDP figure coming out. And I said at the time, I don't know if we should be doing this, but let's do it just in case it gives us some more data. And I think it probably has. And the data that I'm taking away right now is don't trade if the previous bar is a news bar, because it didn't work. That doesn't mean it won't work in the future. What it means is we just add that to the data, right? So once we've isolated the range, the high and the low of the range between Asia and London Open, we then find the midpoint of that range, which was here, right? Which was our entry. Once we've done that, if we are above the middle of the range by a significant margin, then we look to trade it short. So in other words, what we're trying to do is trade against the momentum of Asia session, because I feel that London Open is a new dynamic and different traders are entering the market. And historically, this is not my system, right? I used to trade this years ago, and I forgot exactly how I traded, but we're now coming back to it. And we're trying to find the best way of trading London Open. And by giving us a 2.5 to 1 target, it allows us to lose 2 trades out of 3 and still be profitable. This one has failed, as you can see. But if we get 1 out of the next 2, then we're happy we're still winners. I'll change this if need be. And the trading retreat that's just taken place, one of the traders is actually trading gold in exactly the same fashion. So maybe not using midpoint, I'm not sure what system he's using. And he got 6 out of 6 in the first 6 times. So it will be that I've got the wrong pair. Maybe we need to trade gold. And if that's the case, fine, let's do it. I haven't got a problem with that. The whole idea.
Peter, isn't it?
Sorry?
Is that Peter?
Peter, yeah, absolutely. He's the guy who programs all of these EAs, right?
Yeah.
So this is what we're doing in Trading Buddies. We're trying to find different methods and different ways to trade, different ways to make money. So that's what it's all about. There's absolutely nothing more to it than that. And at this point in time, it looks as though the pound is on fire. It's going to go long. But as I said, it also looks like the dollar is selling off. And I just don't quite get that at the moment, given the numbers that we saw on Friday. It's the way it is.
The calm before the storm, mate. And I'll be surprised if anything breaks out of a range against the dollar.
Yeah, well, we'll see, obviously. But the ones I'm concentrating on very heavily this week, as I have been for the last few weeks, is Kiwi CAD. This has to pull back. When? Don't know, but I'll wait till I get the signal that that's the case. That'll be a double top followed by a lower high, or a reversal pattern followed by a lower high. That's what I'm interested in this week. I'm also interested in Euro Aussie, and I will be trading this, as I said from the outset, tomorrow morning. If this candle stays the same, I'll be putting an entry below it, and I'll be putting my stop loss above it, and I'll be very confident that we get monthly pivot test as well, in the first instance, and then the bottom of the range in the second instance, but moreover, price down to here at some stage as well. I think this is an excellent opportunity. But I won't trade it if it doesn't set up. It has to set up. Dollar CAD, we were trying to trade this last week, and it didn't set up or didn't trigger. And I'm looking for this to pull back. I don't think I'm going to see this, because I think we're going to see a dollar strong this week. If we don't, and this slips underneath here and retests that level, in particular the weekly pivot. So in other words, I'll probably be waiting till Friday for this trade. If that happens, then that means the Fed's done something a little bit different to what is probably expected, and the dollar will fall against the CAD in particular. As I said before, I think the CAD's had a bit of a rough deal of late based on oil, the oil price. And if the oil price can rally, as we're suggesting it may, off this 66 level, then look out for dollar CAD short, providing that the Fed doesn't do something that actually creates a frenzy on the dollar again. So that's in play. Aussie, I think Aussie's got potential, but again, it's all dependent on what the Fed does. Ash has spoken about gold, 100% on board with that. I think Nasdaq's still got a little bit of room to maneuver. I said this last week. I think the S&P 500 has probably met its match up here with this resistance area. So I'll be looking to sell a rally on the S&P 500. I think there's a whole bunch of things that could happen this week. And if they do pan out and set up for me, then I reckon I'll be in 3 or 4 trades before Wednesday. And if that's the case, I'd be looking to be safe in the market before the Fed, certainly. And if it's pound related or euro related, certainly before the BOE or the ECB. It could be a massive week. Then there's a chunk of stuff that I'm looking at, really. I just have to wait until they set up. It's pretty much that simple. So that's me done, bud.
Good stuff. Okay. Well, thanks as always for everybody to listen in. We this is the last show of the year. We should really have had some. If we were allowed,
last Monday of the year. We've got Thursday.
Oh, we love last. Oh, sorry, mate. I thought because you were saying to George it's his last show. I get it.
Yep. George's last show.
Okay.
We'll be back on Thursday. I'll wear my Santa hat.
Get your Santa hat, get your Santa beer. Oh, you got that? Get your Santa hat, and then we'll have a little Christmas party somehow. Are we allowed to play music on Zoom? I mean, maybe they should turn us off on YouTube so we can have a bit of a Christmas event. I don't know.
We'll have to talk to the powers that be on that. Maybe that's possible.
Yeah. Okay.
All right.
All right.
Anyway,
everybody have a great week.
We'll see how it goes.
Yeah, we'll see how it goes. Thanks so much to everyone for coming in. We will see you on Thursday, no doubt.
Yep. Thank you, Kenneth. If you're not here on Thursday, you too, mate. Have a wonderful time over the Christmas period, and we look forward to your company in the new year. Those of you who can be with us on Thursday, we look forward to seeing you then. Thank you for being our trading buddies. Have a wonderful week. Bye-bye for now. See ya.